Hello, this is Nataraj Upadhyaya. Welcome to the weekly top 50 mutual funds analysis for the week ending June 21, 2024. So let us start with the presentation I have for you. So the first discussion is to look at the mutual fund averages. See here, the mutual fund averages are given for 1 week, 1 month, 3 months, 6 months, and 1 year. Okay, now the top 50 based on 1 month return, you can see that for the last 1 week there has been a depreciation and the monthly return is around 9.03%, and effective annual return for monthly top 50 was 48.72%. The same thing for top 50 based on 1 year return, while it is still 78.54%, which is impressive for the 1 year. It was a bit subdued for the month 4.73, and last 1 week there has been a bit of a correction on the annual leaders. Now, looking at the entire mutual fund universe, which is around 1,600 mutual funds, out of that 848 are from equity funds, 482 are from hybrid funds, 218 for funds are debt funds, and around 52 funds or commodity funds. Annual return of all the mutual funds is 27.77%, which means that your mutual fund portfolio needs to do better than this 27.77%. If it has been only equity funds, it's 41.51. So if you are only a equity fund investor, you should be able to get at least 40% for the current market condition. Of course, debt funds will give very low 7.47%, and hybrid funds average 22.33%, and commodity funds average still it is whopping 24.35% per annum. Now, last week there has been a bit of a correction on the annual leaders, the annual leaders on the equity funds also, and everything else was positive. But the commodity funds had a correction week before that, so they are still lagging on the monthly return basis. And so the markets are kind of evenly uh, placed, you could say. Uh, there is an anticipation of budget by July 10th or so. So markets will kind of move only on any budget news. Specific stocks may be moving. Then there is a quarterly results coming also. So July, the markets will move only if there are better quarterly results beyond the budget. And there is a hope that quarterly results will do well. Otherwise, the Indian equities are very well priced. However, if the quarterly results are slightly better than the last quarter, uh, there may be room for the equity markets to grow further. And that is the hope for the mutual fund investors also. So let us move on. This is the monthly top 50 leaders across all the mutual fund types. And there is one hybrid fund that has come into this list this time. That is SBI Magnum Children Benefit Fund Investment Plan. Otherwise, everything else are the equity funds. Now, if you look at it, the top equity fund has returned 12.82%, and that is HDFC Defense Fund. And the lowest among the top 50 has returned 8.04%. Now, the investment worthy ones are marked in green for having above average return within this top 50 across all the timelines from 1 month to 1 year. And those funds are HDFC Defense Fund with an annual return of 136.17%, Motilal Oswal Mid Cap Fund with an annual return of 61.70, Invesco India Mid Cap Fund with an annual return of 55.73, Kotak Nifty Small Cap 50 Index Fund with an annual return of 74.85, Aditya Birla Sun Life Nifty Small Cap 50 Index Fund with an annual return of 74.24, Axis Nifty Small Cap 50 Index Fund, annual return 74.89%, LICMF Mid Cap Fund, annual return 58.15%. Edelweiss Mid Cap Fund, annual return 58.68%. Franklin India Prima Fund, annual return 55.14%. Kotak S&P BSE Housing Index Fund, there is no annual return because it's a relatively new one, but 6 months return is around 27.86%. So they are all now, the new leaders on a monthly performance basis. So you can see that mid cap funds and small cap funds are coming up in the top 50. There are many other mid cap and small cap funds here, and there are some flexi cap funds also. Then the auto ETF also is there. Private bank ETF did very well through the last 1 week. 4% plus recovery through the last 1 week, like HDFC Bank, etc. So they are also popping up. So this is how the top 150 is looking. Sorry, top 50 is looking for on a monthly basis. Going to the mutual fund annual top 50, as usual, all the top 50 are from equity funds only. Now, HDFC Defense Fund is leading here. The investment worthy ones marked in green are the ones which have above average return within top 50 across all the timelines from 1 month to 1 year. And they are HDFC Defense Fund, LICMF Infrastructure Fund, Bandhan Infrastructure Fund, Invesco India Infrastructure Fund. Okay, the average return is around 79% annually. And so there is some kind of a churn out in the annual leaders because the traditional leaders have been having some correction. There is one thing I forgot to talk about in the monthly top 50. So I'm going back. There are two funds here marked in yellow. HDFC Nifty Realty Index Fund, Tata Nifty Realty Index Fund. These are recently new ones. They have only 1 month track record, which is very impressive, about 12% return. Because they have only 1 month return data, not even 3 months, I have not marked them in green, but they may be investment worthy because they are in the top performance league. So now let us look at the equity monthly top 50. Equity monthly top 50 is almost similar to the monthly top 50 across all fund types here because one particular hybrid fund is replaced by another equity fund. So the consistent performers with the above average return across 1 month to 1 year are HDFC Defense Fund, Motilal Oswal Nifty Realty ETF, Motilal Oswal Mid Cap Fund, Invesco India Mid Cap Fund, Kotak Nifty Small Cap 50 Index Fund, Aditya Birla Sun Life Nifty Small Cap 50 Index Fund, Axis Nifty Small Cap 50 Index Fund, LICMF Mid Cap Fund, Edelweiss Mid Cap Fund, Franklin India Prima Fund, Kotak S&P BSE Housing Index Fund. Okay, now there are two in marked yellow are same HDFC Nifty Realty Index Fund, Tata Nifty Realty Index Fund because they have only 1 month return data. So these are the new leaders and are investment worthy. And otherwise, I have, as I said, there are many other mid cap funds, small cap funds, and flexi cap funds, private bank ETF. Even Quant Tech Fund has come up here. Then what else? There are various small cap 250 momentum fund. So there is some churn out. Even UTI value fund is here. Bandhan mid cap fund. So there are a lot of options for you. You can look at them individually. Now let us look at the monthly bottom 50. This is mainly to highlight that some of the established funds have started correcting, and some of the noteworthy ones are marked in red. ICICI Prudential Strategic Metal and Energy Equity Fund of Fund has corrected last 1 month, and its annual return now is only 14.84%. So the fund name is very attractive, but performance is not good. Quant PSU fund is a relatively new fund. It has data only up to 3 months. While the 3-month data looks 20.63 impressive, but last 1 month it is not doing well. So it is on a watch. Aditya Birla Sun Life Nifty PSE ETF, relative new fund but not good performance. Aditya Birla, sorry, Mirae Asset Nice Fang Plus ETF. This is the US market, not doing well, though there has been historically a better return, recently not doing well. SBI PSE fund, one of the best funds with the 97.85 annual return, kind of corrected last month. So this is on a watch list. In fact, even I have money on this. So I'll wait until July 10th. If it recovers, fine. Otherwise, you may protect your annual returns accumulated, and by exiting and putting that money to new funds which are doing well. So this is on a watch list for me personally also. Aditya Birla Sun Life PSE Equity Fund, again, uh, recent performance not great, though annual return is still 93.41%. ICICI Prudential PSE Equity Fund, annual return 84.75, but in subpar performance in the last 1 month. CPSE ETF, Motilal Oswal S&P BSE Enhanced Value Index Fund, ICICI Prudential Nifty Commodity ETF, Motilal Oswal S&P BSE Enhanced Value ETF. They're all subpar performance in the last 1 month, so on the watch list. Whether to dispose them, give at least another 15 days to confirm the reversal of the trend. Just don't go by, just 1 or 2 weeks of, slowdown. Let's move on to hybrid funds. Hybrid funds, monthly top 50, and again, consistent above average returns across 1 month to 1 year are marked in green, which are investment worthy. SBI Magnum Children's Benefit Fund Investment Plan, Bank of India Mid and Small Cap Equity and Debt Fund, UNESCO India Aggressive Hybrid Fund, JM Aggressive Hybrid Fund, Kotak Equity Hybrid Fund. Annual return is somewhere in between 58% all the way down to 32% within this. Hybrid annual top 50. Again, the investment worthy ones for having above average return from 1 month to 1 year are JM Aggressive Hybrid Fund, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Retirement Fund, Hybrid Aggressive Plan, SBI Magnum Children's Benefit Fund Investment Plan, UNESCO India Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index Fund of Fund. Annual returns is anywhere between 58.82 all the way down to 38.52. The top one, the Quant Dynamic Asset Allocation Fund, though it has annual return of 63.84, its last 1 month return is a bit subdued, so it did not make to the list. So is the Quant Multi-Asset Fund, ICICI Prudential Child Care Fund, HDFC Balanced Advantage Fund, Quant Absolute Fund, Union Retirement Fund, ICICI Prudential Equity and Debt Fund. Though they have some good returns, on a monthly basis, they have not done well. Commodities fund, there is a complete churn out in terms of leadership. If you look at the annual returns is anywhere from 28, even 30% highest annual return for UTI Silver, ETF, FOF, and it's going down around 20%. Right now, there are no greens here because not a single fund is able to come up with an above average return from 1 month to 1 year, right? So while there has been some recovery of correction last 1 week, most of the funds have negative return for the last 1 month, except for the two funds here, Aditya Birla Sun Life Silver ETF FOF, it is gold and silver ETF FOF. So the traditional leaders now have come down the list, and those who are in the bottom of the list have come up. So there is some kind of a churn out, and there is a kind of a lack of settlement as to who is the established consistent leader. I personally have come out of commodity funds because I have decided to move that money more to more aggressive uh, funds, which is equity funds. So I personally do not care for commodity funds for near future. There is risk reward ratio is almost equal unless the internationally some new developments happen. So that is comes to the end of our weekly top 50 mutual fund analysis. Standard disclaimers apply. This is not a solicitation for mutual fund investment. Mutual fund investments are always subjected to market risk. Author cannot be responsible for the omissions or errors in the data that comes to the value research or from individual mutual funds, or errors within the value research, or any human errors on behalf of me in my processing. All your investment decisions need to be based on your own decision finally. You cannot blame anybody later. So with that disclaimer, I would come to an end for today's session. You can look at all this data detail in my blog, Nats Fern Corner, on the Blogger platform. You will get my bulletins of video and blogs always on various of my social network platforms. So with this, I'm ending today's session. I will see you again next week. Thank you.